Thank you for joining me. I'm Alex, and I would like to talk about TD Ameritrade because I made a video yesterday about Charles Schwab wanting to buy TD Ameritrade, and so I promised or threatened, however you want to take it, to make a video about TD Ameritrade next. And so here we are. So they're a brokerage as well, which kind of makes sense. Current price is $52.16, which gives them a market cap of $28 billion. Dividend yield is 2.4%, which is significantly higher than Charles Schwab, and the payout ratio is similar. So this one is 30%, Charles Schwab had 26%. Revenue $5.9 billion, earnings $2.2 billion, which is surprisingly increasing at exactly the same rate as Charles Schwab, and a PE of 13, and Schwab had 18. So this seems like a much better deal than buying Schwab. So total assets $43 billion, total liabilities $35 billion, which gives them a total stockholders' equity of $8.7 billion, which is significantly lower. But obviously that doesn't really mean anything, you know. The company being smaller kind of gives them an advantage anyway, because it's much easier to grow as a small company than it is as a big company. But to take that all and put it together, revenue pretty decent, growth of 10% is nice. Earnings growing 50% is always nice. Balance sheet looks actually better than Charles Schwab. Because the ratio of assets to liabilities is slightly better, not significantly, but you know. And the dividend yield is better than Schwab. So to sum that all up, I think that if you just compare these two companies, TD Ameritrade and Charles Schwab, then TD Ameritrade seems like the far better deal at this point, because dividend is better. Earnings and revenue growth is the same. The PE is better, and the balance sheet looks better as well. So I would say that TD Ameritrade is the better buy if you were considering buying one of them. And I would definitely say that Charles Schwab made the right choice here, because all of this looks like a pretty safe investment for pretty much anyone. If you're a growth investor, you might look for something with slightly higher growth, but overall, I think that even for a growth investor, it looks nice. It looks pretty safe, and it has dividend. So I think any kind of investor could open a position here and probably hold it for a very long time, because the dividend yield is nice, the payout ratio is low, so I would assume that both of that is increasing over time. And that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.